when the stars align, silver rockets higher and not only catches up to gold, but then surpasses it. So I'm not really worried about silver because the tide, I think, is going up long term, and it's going to be very, very explosive.
Hi, everyone. I'm Ivan Biuki, and welcome back to Wall Street Silver. Our guest today is Chris Vermeulen. He is the Chief Market Strategist at thetechnicaltraders.com. Thanks for joining us, Chris.
Hey, thanks for having me, guys.
Yeah, absolutely. Chris, on the Technical Traders website, there's a chart called Emotions of Market Participants. Can you explain where we are on the chart, and can this be used for precious metals?
Sure. Yeah. Let me pull that up and give everybody a bit of a visual of what we're talking about here. So the stock market goes through more or less 4 stages. And during these stages, there are these emotional waves going through people's veins, their brains, just surging through them, taking control. And, we saw back in 2020 after the COVID crash where everyone was stuck at home, they had nothing to do. Sports were off, so everybody started getting, government checks, and they all kind of piled into the stock market. It was like the only way to bet and gamble and try to make money. And we saw this kind of thrill and euphoric wave of growth stocks, and the ARK ETFs were kind of the best gauge. I mean, Kathy Wood definitely just nailed it in terms of getting exposure at the right time. It just exploded. And since then, though, in early 2021, we saw growth stocks top out and roll over. And, we've seen the stock indexes like the SP 500 crack to the downside with a 20% correction. And it's got everybody really spooked right now. Right now, I think a lot of people are actually just starting to feel like they could start buying stocks again already. And this is typical. I call it the complacency rally. And it's usually a choppy rally that lasts for, 2, 3, 5 months. And then eventually the market will roll over and actually start a true bear market, the first real leg down for equities. But what's interesting is this complacency rally is where a lot of things start to come to life. We'll start to see a lot of price action, some really strong sectors. And one of the strongest groups of stocks, if this is a complacency rally, are gold miners and silver miners. We should see them move to the top of our band, our best asset now hot list, and become market leaders. And we need to be aware that if they do become market leaders and start performing very well, it's actually a red flag, a big warning sign that the stock market might have a very big correction and go into a very deep bear market phase. And as you can see, if this is where we are now, just starting this complacency rally, there's a lot of downside potential in the stock market going forward.
So, you call it a complacency rally. Other people may refer to that also as like a bear market, sort of fake rally, correct? Just so people can sort of place it in terms they may recognize.
Bear trap.
Bear trap.
Yeah, exactly.
I'm the expert here. I'm
bear trap, a sucker's rally, a dead cat bounce.
So, what would you advise people to do? Play this, or sort of sit back and build cash right now and sit on the sidelines?
Yeah. So what we've done a couple of weeks ago, we got into growth stocks. So our strategy said, hey, money is actually dumping back into growth stocks. They seem to have put in a bottom. So we actually got into growth stocks. We got into the ARK ETFs, we got into TAN, biotechs. We've had a really nice move. We got into about 7 different positions. We've closed out 4 or 5 of them. All of them have got profits and we've locked in gains. So we're taking advantage of this because this complacency rally could go on for a couple of months. With that being said, this is the type of market condition you have to manage your positions, meaning you have to have trailing stops. You've got to be taking partial profits when certain thresholds are reached. You've got to be aware that at any point this market could roll over and start selling off and going a whole lot lower. So a lot of people don't do that, unfortunately. They get into trade, they start making money, and they don't want to sell a winner, and they end up holding it so long that it turns into a loser, and then they don't want to sell a loser. And of course, they get hell. They're holding a bag of stocks, and they go through this whole cycle of getting into anxiety, denial, panic. They usually panic and freak out with a capitulation. And then they just get angry that they hate the stock market. They just lost their shirt. And
Right.
if you actually look at this emotional roller coaster, the price action, take a look at the chart of the ARK ETF here. Take a look at this. We got, the base, it goes into euphoric blow off phase. It cracks to the downside, has this kind of complacency, and then the bear market move. And I mean, that was like the ultimate ARK. I like to use ARK as kind of the emotions of the emotional trader. What are the average Joe thinking and doing, and where are they in the cycle? And so they just got annihilated. And I see this all the time with even subscribers. People who eventually cancel our subscription. They're like, I blew up my account. I can't afford to trade anymore. It's because they're holding on to stocks like these, and they ride them down and they don't get out of them. Right. And unfortunately, if you can't control your emotions and you don't know how to manage positions and risk, it's just a matter of time before you lose money. And we've got traders who have been trading for 10, 20, 30 years, and they still, can't make money consistently. And it's just because their brain is tricking them to think they want to hold and own something, and they don't want to sell it, and because they don't manage their positions. And I'm a huge believer that you should only own things going up. If they're going down, we don't own them. If we can't find a good asset that's safe to get into, that's rising, we sit in cash. And we're in cash for 2 or 3 months of the year, spread out between trades, simply because, sometimes there really isn't a good position to be in other than cash. And people don't understand. They think cash is no position. They think you're losing money and inflation is going to eat you up. But I would tell you, I'd much rather sit in cash for a month or so and pay, an extra 20% on groceries than, hold on to my portfolio because I think I need to be in something and lose 20% of your retirement money, right? And be set back 10 or 15 years. So, but people just don't get it. They don't understand how money and how the markets really work. They don't. It's unfortunate, but it's the masses.
Is there a parallel right now to what we're going through to 2007, 2008, 2009, sort of that time frame of the great financial crisis that we should be thinking about? Because that was like we're obviously Wall Street Silver. We care about silver and gold here, and the mining stocks to go along with those. Yep. They had a huge run in the great financial crisis from like 2008 to 2011. Are we in that time period now, or is this not? Can't be compared to that.
I think it can be very compared to it. So let's take a look at it from a few different angles. So this is a chart showing the ratio between the commodity index and the value of the SP 500. And each of these peaks is we had a crisis. These troughs down here are telling us this green one was where the last super cycle for commodities took place. This is telling us that commodities were very undervalued asset out there. And in 2019, we actually hit a new kind of low, and that's when actually gold broke into a new bull market phase. So we're kind of at this area right now where commodities are still one of the most undervalued assets out there compared to the stock market. Commodities are cheap, and we are really just starting this super cycle. I think we've got 3 to 5 years, maybe even longer still, of commodities and precious metals doing really, really well. I think gold, silver, and miners are going to struggle for potentially 8, 14 months.
No.
I don't think they're going to crash. And let's look at the long-term picture.
It looks like they're already pretty cheap. I mean, is there more crash to come?
Well, I don't think they're going to crash. Let's look at the monthly chart. I think they're going to struggle a little bit. But if we take a look at where we are here, let me draw another line across here. So from a technical standpoint, gold is in this range here, kind of between 1675, 1660, up to this almost 2100 mark. Now, if we look at it from where I think we're going, I think if we get this complacency rally in the stock market, I think we see gold, miner, and silvers work themselves back up potentially to these levels. I think it actually could go a little bit quicker. This is the monthly chart. But then I think they're going to, as the stock market enters the bear market and breaks down, If it breaks down, then we're going to see gold and silver miners pull back into this range. They're just going to continue to consolidate. I'm not really worried about any huge breakdown for the precious metals sector. In fact, we had the COVID kind of crisis here, which pulled gold down. We had the financial crisis here, which pulled gold down. And this is where commodities were super undervalued on that previous ratio chart I showed you. Well, here's where commodities were super undervalued on the chart. So we are kind of in this first run, this first real pullback with a crisis and a crisis. Once this resolves, we're off to the races, 26, 2,700, maybe even 3,500 is just a matter of time. And people, I say it's going to be still choppy and tough for precious metals. I mean, you just have to put in time. I don't think it's going to crash. I think it's just going to be a little bit of a roller coaster ride, but it's going to resolve to the upside. And we're really, I think we're looking at another 3 or 5 years. We're looking at one of these huge moves, up. So if you can just hold your breath for another year or so, I think you're going to be laughing.
I can tell this video is going to be popular with our audience. All right.
Oh, that's good.
I hear you. And I sort of agree. I wish it wasn't true, but we're staring the facts in the face. The market's going sideways at best right now for silver and gold. Silver actually seems to be underperforming relative to gold. Do you have an opinion there, really? Why silver is underperforming? We got the gold silver ratio, I think, above 90 right now. Are you surprised by that?
Yeah. So the way I look at it is gold to me is kind of the gold standard in terms of defensive play, an extra, like a hard asset globally. I think silver is a little more manipulated. It's kind of like, it dances to the beat of its own drum. It's always a lot more volatile. It doesn't have generally the cleanest looking charts. If I pull silver up, you can see that it's kind of been breaking down. As you said, it's been kind of broke a recent support level, but typically when the stars align, silver rockets higher and not only catches up to gold, but then surpasses it. So I'm not really worried about silver because the tide, I think, is going up long-term. And it's going to be very, very explosive. It's just, again, I think it's a matter of time. We're in a 10-year cycle, which is good. I mean, but it's slow moving. And everybody wants things to happen really fast these days. Happen now. I want to see gains, in the next week or month. But the precious metals and the commodity cycle, and I think where we are in the whole kind of global economy with what's going on, it is going to take time. But I mean, it's going to pay out huge rewards for those who can stick with it.
So Chris, one of the things that a lot of people speculate has been holding back precious metals has been the dollar, specifically DXY. And it's not necessarily that the dollar's been strong. It's more a function of the euro and the yen have been sort of collapsing relative to the dollar. So DXY has been, rocketing up from the 90s into what? I think it got up to 107, 108.
Yeah.
Back to 105. But do you, what's your view on the US dollar and specifically Dixie, the DXY, going forward? Because that's, like it or hate it, that does affect gold and silver prices.
Yeah, for sure. So the dollar is still a safe haven. I mean, there's so many people out there talking and saying, the dollar is going to collapse. And the reality is when COVID hit, everything sold off. The US dollar rallied like 11%. When the market gets spooked, especially the global market, they liquidate almost everything. And then they want to move to a currency that they're comfortable in holding, that they think is stable or trending higher. And the dollar is that still. As much as so many people hate the dollar to me is one of the best plays right now as a defensive play. And so if we were to take a look at the dollar, get an idea of kind of where it is, it really has been trading sideways since 2015 and is really just starting to break out. I think the US dollar has potential to rally to 116, maybe even 120. And the rally we've seen this year, or the past year and change really in the dollar, I think has definitely kept a lid on precious metals. And I think there's still more room to go. I think we could see the stock market, if it does roll over and start to go lower, there's going to be liquidation of assets. They're going to move most likely to the dollar. It's going to drive the dollar up to 116, 120. That's going to keep the lid on gold, and it's going to trade sideways in that range we just talked about. And then once the dollar gets up to this 116, 120 area, I don't really think it's going to go any higher. In fact, I think it's pretty much going to be all downhill from there. And that's when all the stars align. The stock market will be nearing a bottom. We've got the dollar topping out and ready to fall for potentially years. And everybody just got burned on equities. So they're going to want to move to physical hard assets like gold and silver. I think that's when the stars align. And that's when we see the next major bull market phase for precious metals and miners. And so, I mean, I think there's a perfect storm brewing. But again, I still think it's a little bit out.
You know, if the dollar were to keep going stronger, it's a strong dollar really just crushes a lot of developing economies. You're seeing a lot of the Sri Lanka, Pakistan. Where else was Argentina? Where else have we seen riots and happening?
South Africa, everywhere. Middle East.
Countries cannot afford to import of wheat, import of diesel, import of fuel, natural gas, coal. A lot of these developing economies are really just falling apart. And part of that is a strong dollar relative to other currencies, correct?
Yeah.
I mean, is there some point where we just can't let the dollar go higher because too much of the world falls apart? I mean, they intervene at some point, correct?
I would think so. I mean, the financial markets are manipulated. If something gets out of whack, somebody whips it back into shape, right? But the strong dollar, I mean, it's really tough on international sales for multinational companies right now. Microsoft Windows or Microsoft Office 365 is $35 US, but I mean, if it goes up another 20%, people who aren't in the US currency, it's a lot more money for them if this keeps rallying, right? So these big international companies this high dollar is hard on them. And as it keeps going up, it's going to kind of weaken the stock market to some regard as well. So all these things are aligning to this perfect storm that I think we're going to have a market correction. The dollar is going to go up. We have this cleanse or revaluation event of stocks and bonds and all that stuff. And then boom, we're going to probably rise into a commodity, very strong commodity market. And I think gold, silver, and the miners hopefully are going to just go absolutely parabolic going forward. And that's what happened the last time we had this kind of, to me, it's a very similar setup. There's always a different story behind it, but from a technical standpoint, this is like a repeat, I think, of kind of a 2000 style move where everyone was in technology and growth stocks and real estate, and they wanted nothing to do with commodities. And we just had that. Everybody wants real estate and stocks, right? And we're just in that transition phase where
we're at gold 300 in 2001 or something like that. Right?
Yeah, if we could only turn back the dial.
Right.
I hear you. So you promise you'll give me a call when it's time, and we'll get you back on. And
sounds good.
But I need you to send me an email. And say, hey, Jim, it's now.
Yeah.
And,
Bye.
And just between you and me, we won't tell anyone else on YouTube. Just all right. I hear you.
Yeah, we'll keep it secret.
All right.
We do a little trolling. It's called We Do a Little Trolling.
Hey, Chris, it's your first time being on our channel. We'll put the link to your website in the description. We appreciate you coming on, and we're definitely going to have you back in a few months.
Sounds great. Thanks for having me, guys. That was a pleasure.